Welcome to Trade Live with IG. How is everybody this beautiful morning? We're back to summer again, Luke.
Yeah, back to summer on, wax off. It's like the tariffs the weather at the moment, isn't it?
Wax on your hair this morning, I've just noticed.
Yeah, do you think I've sharpened it up enough?
That is slick.
Yeah, I got a summer haircut and then it went like 10 degrees again. So I was a bit chilly on the sides over the weekend. But it's good to be back in the hot seat.
Excellent. And we've got plenty to talk about. Look at what we've got coming up on today's show.
We are here, well, I'm here through till about 8:30. So we're going to get overnight action. We're going to get opening bell. We're going to get fast markets. And then Angeline and Matt are here live from the trade desk from 8:30. Then we move into the all sessions opening bell. Esar's going to be joining Angeline for that one. And then Dylan Rattigan's going to be joining us.
That's
from
right.
Milan?
From Milan. That's
Milan.
right. And he's back to talk about all things Fed. Mm-hmm. Which we're going to be discussing as well, of course. We've got the US-China trade talks in Switzerland this weekend to talk about. We've got a potential US-UK deal to talk about. So watch Aston Martin this morning, because it sounds like there's a carve-out for autos.
The India deal, there was.
And the India deal.
And the India deal, yes. There's loads going on. There is absolutely loads going on.
Brilliant. Right, well, shall we go into old overnight action then, pal?
Let's go over action.
Now, first we have to discuss Luke Moore's plans for the evening, because it sounds like you're going to an empty football stadium.
I'm going to an empty football stadium, the Emirates, this evening. So the 7th of May shall forever be known as the day that Arsenal finally get themselves back into the Champions League final. We've only got a 1-0 deficit to PSG to overturn. But I came in this morning. I've got myself a nice Arsenal bomber jacket, right? I don't normally wear stash into the office. It's actually blue. Controversial.
Okay.
Anyway, I nearly wore it in the office, but it's quite hot in here in the studio.
Yeah.
And then I came in and Phil's there, and producer Phil's just looking around and he goes, like Superman just opens his shirt. He's got his Arsenal shirt on underneath.
Brilliant.
So it turns out Phil's coming with me tonight. So if you're going to be up at the Emirates for the screening, I'll see you there.
It sounds so. My night last night, I went to the Royal Albert Hall. It started.
Wait, hang on a sec. We've got very different nights.
Slightly different evenings.
Yeah.
I got home and I was looking forward to my dinner, because on a Tuesday night I get a thing called nonatonda delivered.
Yeah,
right.
Nice. The pasta.
The pasta, exactly. And it's fresh, it's got that nice sauce. Anyway, looking forward to a nice meal. And I went downstairs to pick it up, because the delivery guy just chucks it on the desk at the bottom of the reception area. Gone.
Someone nicked it.
And I was like, I've been looking forward to that all afternoon, and somebody's nicked my dinner.
Oh, nice.
I cannot believe it. And I knew the delivery man, I'd buzzed him in, so I knew the delivery he made.
So it was in the building.
It was in the building, and somebody in the building had taken it.
Oh, that's slimy. That's not on. That's not on. No.
Not fair play.
So what are we doing? You're going to write an angry note? Have you
so
got a building WhatsApp that you can just be like, oi?
We actually don't, because there are a lot of people come and go. So anyway, I threw my toys out the pram and I was like, right, that's it, I'm going out. So I took a walk up, and there was all these people walking towards Royal Albert Hall, right? And it's only like 3-4 minutes walk for me. So I walked up and I followed these people, and it turned out there was this woman that I had heard about giving a talk called Priscilla Shearer. And she's an American woman. Now, if I could describe her, it would be like you take Michelle Obama and Tony Robbins and put them together.
Right, okay.
Right? So I went in, and they had 3 single tickets that had been handed back in.
Okay.
So I could buy one. And I went in, and the place was absolutely rammed right up to the top.
Wow.
Right? Not a seat apart from these 3 were free. And so I got something to eat, got myself a sausage roll, got a 0 alcohol beer, sitting there already. And Bear Grylls was there as well.
Talking?
He'd been talking in the afternoon, so I missed him, unfortunately.
Wow.
And a guy called Nicky Gumbo came on first of all, gave all his talk, and then this woman came on. She was absolutely incredible. So if you ever get the chance to listen to this woman, she is just, yeah.
And you said Priscilla?
Yes, Shearer, Sherer. So she's
Priscilla
a top author and all this kind.
Shearer.
So yeah, so that was my evening, and I went home, and do you know what happened?
Go on.
somebody brought back the food that they had stolen. It was there. It was on the desk when I got
Well,
back.
well, they've rejected the pasta that you ordered. So what flavour did you go for?
It was, I don't know yet because I haven't opened it, so I didn't get home till 9:30. So anyway, right, enough of our mornings because we have a huge day coming up. This market is going to be really interesting today because you've got a positive, a potential positive, and then goodness only knows what's going to happen this afternoon.
So give me the positive. What's the positive?
Well, the positive is definitely the talks going ahead this weekend.
Yeah,
in Switzerland.
So let's run through that then. So at about, I want to say just after the close last night, and you can see it in the market reaction. So if you just jump onto my screen here, guys, I'm on the S&P, and ignore my horizontal line because that means absolutely nothing. So I'm going to delete it there. You've got this move here from 11 o'clock. We just bounce. And bearing in mind, after the close, we'd had earnings from AMD that was okay. That had popped and come back down again. And then all of a sudden, at 11 o'clock on the dot, bang, we jumped up by about 1%. And that was stories of supposedly Besant and Jameson Greer, so both senior in the Treasury.
I always laugh at that name.
Jameson Greer.
Yeah.
Why?
Isn't there a English woman who's somebody Greer? Is it chef or something? Can't remember.
I don't know.
Yeah.
But it doesn't matter because they're going to meet with the Chinese Vice Premier He Lifeng. I hope I got that right. In Switzerland over the weekend.
Yeah.
So it's the first concrete steps that we know of.
De-escalation.
Of de-escalation, yeah. And that's what Besant's come out. He said, look, we don't want to decouple. What we want is fair trade. He said that he was interviewed on CNBC yesterday, and he says, my sense is this conversation is going to specifically be about de-escalation, not about a big trade deal. And we've got to de-escalate before we can move forward. Because everything I've heard, and actually, interestingly, I had a conversation with a client yesterday who is a Chinese student based in London.
Right.
And he was studying AI and deep learning. And we were just having a conversation about, things on his account. And I said, do you mind if I ask the Chinese perspective on everything that's going on? And he kind of said that it's going to be give and take. He said, but from the Chinese perspective, tariffs over 100% are just not working. And so in order to converse, both have to de-escalate.
Yeah.
He said that's what they're focusing on.
The best
to get these.
The most likely outcome is 60%, right? They take it down to 60%, and then they say, right, we'll meet again in 2 weeks, a month. So that leaves us with what Paul Tudor-Jones went on CNBC yesterday and said, look, if the tariffs, even if they get down to 50%, we're still going into a recession because the damage has been done now. As I heard somebody say, the toothpaste is out of the tube. You ever tried putting toothpaste back into a tube?
No. Well, I can imagine it's very difficult. But you're also seeing some economic stimulus. So overnight, there's been some stimulus from the PBOC. So they've cut their 7-day reverse repo rate, effectively cutting short-term interest rates from 1.5 to 1.4. They've released about 1 trillion yuan in liquidity to the market. They've also counted on the savings rate of 1.4 billion savers using those funds because now the interest rate has been cut to go back into the market. I mean, they've done lots of different things. They've set up a 500 billion yuan lending loan for elderly care and service consumption. They've allocated 800 billion towards raising market support tools. There's lots of different things they've done overnight to try and stimulate the yuan and the Chinese economy, which is trying to soften the blow of everything that's coming their way.
Yeah, and I think so. It's about 140 billion US that has been released in liquidity. So markets have taken it well. Hang Seng's up 0.5%. So is it that big a deal?
Yeah, but the S&P popped 1% on the news of the meeting, and it's faded most of that back down. I mean, the S&P is indicating to open 5630, which is up 0.5%. The dollar's not really done anything either. So the market's kind of going, meh.
So, right, we've got, here's who the US is sending to Switzerland. Jermaine Greer. Thank you, Funky Gibbon. So the Austrian writer and feminist is off to Switzerland with Scott Besson. That's done deal, isn't it?
Yeah, that's definitely not Rod Stewart either, is it?
oh, you're in trouble now. Calling the world's biggest feminist.
Calling.
Right. Good stuff. Right. Good morning to you all. Lil Wabbit. That's a new one, isn't it?
Good morning.
We've got our gibbons, we've got our monkeys, and now we've got our wabbits. So if you're new here, Little Wabbit, and along with everybody else, please hit that like and subscribe button. Yeah. Give us those thumbs up. That's really useful for us. The algo's starting to work, people. We are starting to get some good numbers joining with our subscribers, so it helps us here.
Yeah, it really helps. It does. And if I said it when I was on here last time, if everybody that's listening to this now and is part of this community can just share it with a pal or a family member or a colleague or their fellow rabbits, just let us know, let them know, and we'll share the word and grow our little community of grow our little zoo, I suppose you can call it. Can't we?
It's safari park.
Exactly.
And the reason for that is because we bring you great value, just like this. Here is your preview for this evening. Fed is going to be in wait and see mode. There is going to be no rate cut tonight. Mm-hmm. There is no new SEP, the Summary of Economic Projections, due until June. Until June. Yeah. The market price, 2% probability, so that's not going to happen. What are the big themes to watch for? He will talk about assessing the inflation and growth impacts of Trump's new tariffs, right? That gives him the excuse to wait and see. He wants hard data confirmation, and Goldman's and Barclays have actually put their first rate cut out to July, no longer June. Citi are the biggest up. Citi are talking about 5 rate cuts or 125 basis points.
Not sure I buy that. And is that within 12 months or in total for 2025?
No, that's for 25. So they're expecting a 50 basis point kind of emergency cut at some point.
But Goldman's and Barclays, the first rate cut in July, not June. I mean, that's not setting the world alight. So I've got the Fed Watch tool on my screen here. Here we go. So what this is, so you can go now to Fed Watch, and what it's going to do is it's going to give you a bunch of tools, but one of which is their probabilities. Now, this blue line here you see, so what this is saying is the current range is between 4.5 and 4.25 point. So there's a 95.6% chance they stay, is what the Fed Watch tool is saying. Mm-hmm. There's a 70% chance they stay in June. And there's the balance of probabilities swings, you can see here, 56.2% chance in July. So when Goldman's and Barclays turn around and say we're expecting it in July, well, yeah, so is the entire market. So that's not that interesting.
Well, chicken or egg.
Yeah.
They put it on in size and then they come out and tell everyone else.
Yeah, but I think what's more interesting here is you can look at comparing how these rates have changed over time. Mm. So you've got the dark blue line there, which is the current expectations. And then what we have is each different line here is 1 week previous. So on the 7th of April, just as Liberation Day liberated all of our money off of us, there was a there was a 38% chance that they were going to do some form of rate cut, right? Some form of emergency rate cut, you might say. Whereas there was only a 61% chance they were going to hold this month. So that's all flipped on its head now. You know, the Fed have basically turned around and said, you know, we're not going to react to these tariffs too early. We're going to wait and see, and then they're going to do what they need to do.
Does any of the pressure from Trump come into the meeting today? Is it in the back of anybody's mind, the stress that is going to happen after? Because Trump's going to come out hard, isn't he? If there's at least not a dovish tilt to the June meeting.
But it's just talk, right? We know the markets are not expecting it. So I don't really, does it matter what he says? The markets are not paying attention. He can come out and he can talk tough. But I do think he'll come out and talk tough. I do think there's a slight element of the boy who cried wolf. I don't know about you, but it feels like Powell social post is now a little bit less impactful.
Powell's got to see the potential for the slowdown and the confidence that is being hit, right? And for example, I think they'll do something in the statement tonight to just push the onus onto the unemployment and the jobs part of the mandate, right? I don't think that he can stay where he is with an equal concern around inflation and unemployment. The unemployment has much more concern now, right? And I think the statement will reflect that, which will be dovish, and that will change to a more likely June cut, I think. I think this time tomorrow, those 70-30s will be switched around.
Well, let's have a little look. Yeah, should we run a poll on it?
Oh, that sounds great.
Sounds like an absolute win, doesn't it? So what should we say the poll is by the end of by tomorrow's show?
June or July. When's the first rate cut?
Yeah.
Tonight, June, July, or only time will tell. Producer Phil's favourite answer.
I want to just talk about another trade deal that we did get confirmation of yesterday, and that was the deal between the UK and India. Now, I have been on to Claude this morning, my AI agent, and I've got him to summarize a Telegraph article that basically shows who the winners and the losers are. So, we got the announcement yesterday mid-morning. There's been a bilateral trade deal agreed between the UK and India, and on it, it says that they're going to boost the UK economy by 4.8%, 4.8 billion annually. Now, we want to try and figure out as traders, where is that going to impact? What is that going to do?
Just zoom a bit.
Can I zoom in on this?
If possible, or maybe the guys can.
Yeah,
there you go. Brilliant.
Right, so there you go. So this is better. So, automotive's interesting because we were talking off air just about the cars. So cars being sold from Britain into India currently have anywhere between a 60 to 100% tariff.
Wow.
That's getting dropped to 10% straight away. So you'd argue that we can import more cars. I think there was only something like 900 cars imported into India.
900.
It was like nothing.
It's got a big upside.
The big one here is the whiskey and spirits. So India is the biggest spirits market in the entire world.
Oh.
So you've got the spirits industry being hit by these US tariffs that we heard a couple of weeks ago, and now we're looking at dumping this into India. So there's a £1 billion import increase over the next 5 years, reportedly worth 1,200 jobs. They're then planning to lower tariffs on 90% of goods going from the UK to India, which includes medical devices, lamb, machinery, cosmetics, and food products. What did India get in this? India get 99% of their exports to the UK to be tariff-free. Now, Keir Starmer caught a lot of flack for this next one. You'll notice at the bottom here, labour benefits.
Yeah, you
National
don't like this,
insurance exemption for those that are working in the UK for 3 years. So expats or kind of economic migrants that have moved in are going to pay no national insurance for the first 3 years. That Keir Starmer took some flack for. You know, two-tier Keir. This is exactly a two-tier Keir kind of system. I want to look at this other one as well, seafood. And I don't know if we've got any fishermen or anyone involved in the fishing industry that are in our chat. But to me, if a big winner from this is that India are going to export more seafood to the UK, what the hell does that mean for our fishers in the UK? You know,
is there prawns in the channel?
I think we've definitely got a lot of fish. I don't know about prawns.
We do in Scotland. We've got langoustines, but we don't have prawns.
Well, you get bloody good fish and chips up and down this country, and there's plenty of water surrounding our island. So I'm sure we have fish. But to me, this is, if I was in the fishing industry, and I know that there are more and more rules about what I can and can't do with the EU, et cetera, et cetera. That was a big thing that Brexit was run on, and we've just offered, done a deal with someone to say we'll buy all their seafood off them. Yeah, I don't know. It'd be interesting to see how that one lands. But spirits, automotives, seafood, textiles, professional services, keep an eye on those sectors.
Okay, so we've got Diageo graph up here, the chart, showing a fall from mid-2023, £37 down to 21. So I must admit, I've gone alcohol-free now, so I'm not consuming anything apart from Guinness Zero. However,
I see it in your skin. You look radiant.
Oh, I thank you, sir. That's just sunburn. But with deals like that, with the spirits, then are we seeing a turning moment for Diageo? Will there be a carve out in the US trade deal with the UK, which is to be announced in the next couple of days as well?
Yeah.
Also, Aston Martin. Aston Martin did get hit on April the 2nd.
They also got hit with their sales last week.
Yeah.
If you can bet your bottom dollar on anything, it's that Aston Martin will miss on their numbers.
Yeah, every time.
Every time. But they are pretty much the only publicly traded UK automotive car now because, of course, JLR are owned, Jaguar Land Rover are owned by Tata, which actually in itself is interesting given Tata is an Indian company.
Yeah, right enough.
So I'm actually a member of my family, extended family in Scotland, run a series of garages, and JLR is one of their big brands. I'll try and catch up with them and see what that means for them, and bring it back on the next show. But I don't think there are many others. Lotus is private.
Is Aston just a basket case? Is it doomed? Will it get taken private? At zero.
Well, their Formula One team was crap in Miami. Truly crap. They came last.
Right.
So, their motorsports division isn't even supporting the production division.
Why doesn't Louis Vuitton just buy Aston Martin?
What's their market cap?
I mean, it must be in the hundreds of millions, is it?
Over under, what do you reckon?
I reckon under $1 billion.
It is under $1 billion, 0.6.
$600 million. Louis Vuitton, just buy Aston Martin, for goodness sake. I mean, come on. Right, unfortunately, we do have some bad news for everybody out there.
What?
Vodafone. Vodafone. What are you doing? The CFO has resigned. The CFO is off to Vonovia, and this isn't good, people. This isn't good. The market indication is unchanged. I'll tell you right now, if it's unchanged, I am selling a boatload, because this is the guy who's been an important part of the strategy. Luka Mucic is German, first of all, and Germany is, of course, the biggest market for Vodafone, but it's also the biggest problem child for Vodafone. So to lose his expertise is a real hit. It ties into this downgrade from JP Morgan 2 weeks ago with a 62 pence price target. I think this is a strong pointer to things not looking good. I really believe Luka Mucic. I believe that the turnaround was going to happen. I believe that they were going to turn around Germany. But I don't think you leave a nice, beautiful super yacht as it's going into the sunset. I think you jump out the Titanic.
Well, I give you a unch early call from Singers.
Yours in size.
Yeah, unch at lunch, and we're 3 minutes into the opening auction and it's not moved.
Yeah. So
only in 100,000 shares.
Can you get me in from here, actually?
I can't.
Right, let's go to break. 2-minute break. I'm going to run to the trading desk.
Well, you just call somebody.
Okay. Right, we'll see you in 2 minutes. I'm going to sell some Vodafone.
Good morning. Welcome back to the opening bell on the 7th of May, also known as Arsenal get into the Champions League final day. Come on. We've got some UK stocks to go through, but I feel like you're going to give us a quote.
Quote of the day, people, quote of the day ahead of the FOMC this evening. The only function of economic forecasting is to make astrology look respectable.
Nice. Right. BMW are out on the subject of automotives. Their margins are worse than expected. An EBIT margin of 6.9 versus 8.8%. However, they've said that they are still forecasting that that's going to bounce back to where they thought it was going to be. Their forecast also includes mitigating measures to offset the impact of higher tariffs. So that is one. We've had Novo Nordisk out this morning. And of course, Novo, has been the big weight loss GLP-1.
Shocker, isn't it?
I don't think it's a shocker necessarily. So their total sales, I mean, I think when you're looking at a company like this, you're looking at their weight loss drugs.
Yeah.
So their total sales in the GLP-1 drug was a slight miss. You're talking about 39.5
guidance, though,
billion. They've cut guidance. They've cut sales forecast. 35 point. Basically, just slightly missed on sales. Wegovy was up 85% year on year in terms of sales, but below the market's expectations. However, their Ozempic sales did beat estimates, and I don't have an early call on Novo Nordisk, but I'll see if I can get one.
Right, I'll tell you to BAE Systems. So BAE have released a positive and reassuring Q1 statement.
Novo indicating up 1.5.
All right, brilliant. Okay. BAE Systems, positive, reassuring. In line with expectations this year, solid growth across markets, investing in future growth, and full year guidance confirmed with, let me see, 525 million on sales. And God, it just sounds so small compared with the US tech, doesn't it?
No, it does. BAE indicating down 12.5% on those numbers.
Can't be.
That's what it's indicating in the auction. 3 minutes left to go. 12.45% indicating to uncross at 15.50.
What?
In the auction. Elsewhere, we've got Weatherspoons, our everybody's favourite boozer. Their like-for-like sales were up 5.6%. Total sales up 5%. Expects to open a further 10 pubs in the next year with a net debt reduction. Expected net debt of between 720 and 740. The market doesn't like it though, indicating down 5% so far this morning.
I was going to say 5% sales growth. Probably, it's all right, isn't it?
Depends on expectations.
Right, poll results. When's the next Fed rate cut? Wow, we are
tied.
Really tied. 31% June, 31% July. 14% of you going for today. That's really interesting because that's 5 votes. 5 of you think there will be a rate cut today.
Ever the contrarians.
What's the trade for that?
The trade for that is what, long equity, short dollars then at that point?
Yeah.
Well, you probably buy long duration tech, so you buy your Mag 7 first, I think. And that's the way you would do it. But
so NASDAQ 0-day DTE calls. Well, I'll tell you what, let's have a look.
It's out at 7 o'clock, isn't it? So you'll get exposure through the 0-day TE, yeah.
Let's have a look in fast markets. We're going to look at a trade for those of you tonight, the 5 people who think you'll get a rate cut tonight. The market's telling you no. Maybe 5 of you are better than the market.
Let's have a look.
Right.
What else have we got? Oh, how long have we got to the bell? 50 seconds. Let's just have another look at those BAE
Where's Vodafone uncrossing, please? Let's see if my...
BAE Systems now indicating down 6.8%, so that's looking like it'll be an extended auction. Vodafone indicating to open at 72, down 1.3%.
Okay, so my order has moved the market. Brilliant.
Indicating 271,000 shares. Sounds like nothing.
Tiny, isn't it?
Yeah,
Nobody cares.
No one cares.
Right. We've got Genghis Khan in the chat now. No one ready for a rate cut today. That would be a big surprise. And I don't know if it would be taken well or not. It's really tough to know. What would go up is gold. Gold would fly. Bitcoin already up 2% on the day.
Here we go. Where are we?
Right. Luke Moore opening the London Stock Exchange. Soon to be sponsored. Opening bell. I am most surprised with that BAE.
Yeah, BAE not open yet. Oh, there you go. Vodafone opened for you, only down 1/3%. So opened at 72.64. Mr. McDonald, you did not move the market.
Well, I might have. Depends if it rallies from. Maybe it's up in the day. Maybe I'm completely wrong.
BAE Systems now is opened down 0.5%. So all of that doom and gloom that was there in the early auction just got wiped back out. The buyers will step back in, and it's now blue on the day.
Boise asking, am I selling all my Vodafone? Yes, I have. Well, let me just check. I've got done.
Am I done? Am I filled?
Vodafone. Yes, I am. I've just sold 90,000 Vodafone, and 72.70,
which is above the opening price, 72.64.
And to be honest, I would sell more, because that is, people do not realize how bad that is for Vodafone to lose Luca, but also for him to be prepared to go. That's not great at all.
There you go, Diageo. Good call. Looking at Diageo before the open on that UK-India trade talk.
Should we have a wee whiskey to celebrate?
I think we should. Can you have an alcohol-free whiskey? Or is that just tea?
I was wondering this about wine. Can you get alcohol-free wine?
So a good
or is that just grape juice?
A good client of mine recommends. Oh, what's it called? I will find it. He's given up booze, and yeah, he says he drinks a really, really good. And he's a great wine. He's a big wine lover. Like, for him to stop alcohol was a big thing on the wine side. But he said he's found one. I will send it to you.
Trainline. Have we missed numbers in Trainline?
We have. Yeah, full year numbers slightly ahead of consensus. Although they've said they expect headwinds in 2026, leading to lower revenue growth. Now sees revenue growth in the range of 0 to 3%. I suspect that's a downgrade.
Yeah. BT down 3% as well.
BT.
And GSK. Why are Glaxo down? And AstraZeneca. Okay, so there's clearly a negative out there on the pharmaceutical side of things.
Yes, there was something on the pharmaceuticals.
Guys, I think Vodafone goes sub 70 on this. I think this is really bad indication of the confidence in the German turnaround.
Give me
I was not expecting this.
Give me a US pharma name. There was headlines last night, and I can't recall it.
Oh, blimey.
Eli Lilly. There was. It was something about. It was a Trump.
Pfizer, I guess.
Pfizer. Yeah, there was. Here we go. Yeah, I put my screen up. There was something that I'd forgotten to mention.
R6 Energy is asking, yeah, BAE Systems definitely had numbers today.
So this came out yesterday evening. Trump has said he's going to make an announcement at some point on the cost of medicines. That was yesterday, came out.
That's not
so he's going to try and fast track US drug production, and he's going to he's threatening to announce pharmaceutical tariffs over the next few weeks. He says pharma-specific tariff proposals are coming, but may not be as bad as expected, and that's according to Jeffries. But you can see there, Lilly, AbbVie, Merck, Gilead, Amgen, they all fell yesterday, so I'm not surprised, actually.
Yeah.
GSK, AstraZeneca are lower.
Right, British Petroleum. There is an article in the FT. Sorry, no, it's in the Times. Why buying BP would be a bad move for Shell. It's completely poo-pooing the deal, and also saying that the BP debt is of a worry. So BP, you see, have given up all the gains from that Bloomberg questionable story around Shell looking into the potential of a bid at some stage and at some price if oil goes lower. What else we got there? Shall we have a look at Europe?
Should we have a little look at Europe? Yeah,
let's mess in Germany yesterday.
Well, hang on. We've got Novo and BMW to look at. BMW up 2.1%. There you go on their numbers there. Just reminding you, this was a forecast that they have included. Sorry, they've increased their expected EBIT margin, and they've included mitigating measures to offset the impact of higher tariffs. So they've basically forward paid for it. And the stock market likes it.
They do.
In a welcome reprieve for European manufacturers of cars, because it's been pretty grim for them recently.
How are your Novos doing there?
Novos are...
Ronnie's big stock.
Yeah.
Ronnie, let us know what you think, sir.
Novo Nordisk. Up 1%.
Right.
Percent. They've got a more popular ADR. Of course, this is the Copenhagen listing. Up 1%, trading 444 krones. But they've got a more popular ADR, which will open at 9 a.m., which will be interesting to see.
Great. Lufthansa down 2.7. The mighty Havas. I am looking for an opportunity to get back into those at some point. Bayer down 80 basis points. L'Oreal, Unch, and Total. So the oils are down. That takes us into the commodity check, old chap.
I've got a cool one for you.
Go on.
Something that I saw yesterday. There is a teeny tiny tiddler of a new company in the UK.
A little wabbit.
A little wabbit called SWC, the Smarter Web Company.
Right.
And they are worth absolutely nothing, but they are a Bitcoin holding company. They're trying to do what MicroStrategy is doing. So they announced this morning.
In the UK.
Yeah, they were up about 300% yesterday. They're up another 40% so far this morning at 22p.
Have we got them on the platform?
They're on the platform, so you can have a look. SWC.
Big risk warning attached.
Massive risk warning, yeah.
Big risk warning.
I would doubt we would offer lists on leverage. It would be share dealing only, I imagine.
Yeah.
But it's just an interesting story to look at. The news that SWC, if you've got the...
Oh, sorry, I might get them up.
They purchased a further 4.85 Bitcoin, taking its total holding to 10.59 worth. There you go. Boom. Little small cap gapper for you. There you go.
These are the ones that I just do not go anywhere near. Not because I know nothing about the company. I heard about it about 70 seconds ago. But something that's gone from 5 pence to 22 within 48 hours. Oh my goodness.
Well, I suppose you're going to do the maths, right? What's the market cap of it?
Oh, yeah, I'm sure there's work to be done, isn't there?
Yeah, market cap according to Aquis is £21.8 million at these current rates, and they've got.
But these guys aren't going to have access to convertible bond, which is the whole
thing. Yeah, so they're going to have to raise money to buy Bitcoin, I suppose, or keep it in the company.
Yeah.
Supposedly the Bitcoin they've got is worth 750 grand, and yeah, there you go. Total amount purchased 760,000, and the company's on the platform for 21.8 million pounds as market cap, so overvalued.
But I tell you, the more companies that do this kind of thing, it just adds to the case for Bitcoin, doesn't it? And it adds to the case of. I actually had a little nibble this morning. Just because I had a dream last night that Bitcoin went to 150,000, but that's you know, just
Have you seen the correlation between Bitcoin and the M2 money supply?
Well, that must be really interesting.
It's almost 1 for 1. So as the money supply in the world increases, it's really highly correlated to the price of Bitcoin because it's just a liquidity play at that point.
Yeah.
I haven't got a chart for you. I found it on Twitter last night when I was just doom scrolling. But if you can find it. I know the guys over at what's their name? Real Vision have done a lot of work on stuff like that. Yeah, Julian, who's one of the analysts that works over there. If you find him on Twitter, Julian Bitten, I believe his name is, does a lot of charting work on crypto, so it's a good place to look.
Right, oil up 1.4%. We've got gold down 1.1, natural gas up 3. And yeah, let's take a look at that Bitcoin chart then, because I must admit, it's something that is one of my go-tos on Fed rate decisions, because I feel everything else moves really quickly, and Bitcoin takes about 3 or 4 minutes to actually, it's very much an afterthought. But yeah, that as a chart, I wonder what the chartists think of that, Slipknot.
Well,
It's a cup and handle, isn't it?
I think it is, yeah. And you've consolidated in that kind of 80-ish K, and we're moving out of what has been a fairly decent month-long base.
Yeah.
Problem is, you've got this. You're starting to see the resistance though at this 96K level. We tested it once, twice. We're there now. You've got to see it break above in order to be more confident of that move higher. And that's very, very basic technical analysis. But you want to see a clean break above that previous high. No, the previous kind of high before it cratered at the start of March.
There.
Yeah, you want to see a clean break above that in order to see your bullish confirmation signals.
So if this goes to 150,000, and I'm just going to just dream and just trade on dreams rather than anything I've learned over 25 years and any strategy or anything.
Yeah.
But that is definitely not the way to go. What is the way to go is to look at what Monkey Man and Boise have done, and they are out of their Vodafone. They are now down 1.7%. Yeah, this, as I say, JP Morgan giving the sell rating with 62 pence target. Even Citi are now at a 70p target. UBS at 68. I really worry for the next set of numbers now that Luca is jumping ship.
But to be clear, though, it looks like he's been poached. We obviously we don't know this, but he's in the RNS announcement. It said he's off to Vonovia, so you'd argue he's been poached as opposed to leaving through differences.
Oh yeah, no, he's not leaving for anything at the company, but I don't think you leave Real Madrid when they're at their best.
Well, you certainly could leave them now, considering Arsenal beat them handsomely.
Oh, here we go.
We beat them handsomely, but now we've got to go and do a job in Paris. Come on, the boys.
Right.
What else have we got?
Yeah, what else did we see? Well, it's 12 minutes past, so we... Pandora. Pandora trimmed their forecast. I just don't understand how this company still exists.
Pandora, the jewellery thing that...
The thing, if you can't think of anything else for your sister for your Christmas, you get her. Just remember that my sister is watching.
Although saying that, I saw an advert for these guys recently because you're right. You know, as a young wee whippersnapper with a little brother, we would take ourselves off to Bluewater and we would go round and round the shops trying to find something to buy my mum for Mother's Day or Christmas, and we'd always end up buying a charm for the Pandora bracelet, right? They've gone through a bit of a rebrand, it seems, because I saw an advert for them recently. They've spent a bit of dosh on models and trying to, I suppose, modernise that view of the business. Mm-hmm. So interesting to see if that strategy starts to pay dividends.
They're up. They are up 1%.
And did they have numbers?
Yeah, to be fair, he was very good. The CEO did an interview and he's saying, look, we are being cautious on guidance because of everything that's going on. They produce all their jewellery in Thailand. Mm-hmm. They then ship it. A third of their sales are in the US.
Okay.
So if tariffs remain the same at 10%, he can absorb that. It's fine. If tariffs go back to where Trump initially put them on Thailand, then he says we're going to have to put prices up. Mm. So that's, you know, it's a very much a microcosm, but it's an interesting discussion around, I think everybody can seem to absorb this 10%.
But this is the thing, isn't it? This is what Besant came out with, you know, the week after Liberation Day. He said, maybe it was a week or two afterwards, that basically said, if we're now celebrating the fact that everyone gets walked back to 10%, we're still 10% higher than we were 2 weeks ago, and that is still worth X to the Treasury.
Yeah.
Come on, are we not winning here?
Yeah.
That's what he said. And you'd argue,
like it, doesn't it?
Yeah, well, we're celebrating only a 10% tariff, which, as Tudor Jones said, is still like the highest tax rate in however many years, but we seem to be celebrating it. It's the old art of the deal, isn't it?
The art of the deal.
Art of the deal, mate. Geezer.
Dodger. Right, we're about to go into fast markets, but first of all...
Hang on, sorry, on that. Did you see the interview the press conference between Trump and Mark Carney yesterday? So Carney's, you know, just been elected, is it PM? What's the... Yeah, PM in Canada. And he's down to meet Trump. And he looks like a kid at school slightly. He doesn't quite have the stature that Trump has sat in the White House. And he's sitting there going, you know, Canada's never up for sale, you know, we're going to do this, we're going to do this, we're going to do this. And Trump just pats him on the knee and he goes, never say never.
It's a matter of time. He was good though. He said, now Donald, you know from real estate that some things are never for sale. This place, i.e. the White House, Buckingham Palace, some things are never for, and Trump said, that's fair. But there's always a but.
Never say never.
Yeah, just a matter of time.
Unbelievable.
Talking about time, we are going to go to a break after you there, sitting at home that's not subscribed. You're about to subscribe, aren't you? We're not going anywhere until you hit that subscribe button. We're on strike. Go on. Go on. I see you sitting with your cup of tea. Subscribe to that channel. Hit the like button, and we'll see you in 2 minutes for Fast Markets.
That's easily the best track we've got. The for fast markets. That's the best one.
Yeah,
that is the best one.
Replace all of the others. Right, welcome to Fast Markets, the part of the show where we take some of your ideas and we steal them and make them our own, or we look at possible option strategies. And I just think with this rate decision coming up tonight, we want to have a look at this 0 day to expiry.
I've also got to say, Boise, unconfirmed reports, but Luke is not stepping down in 2026. I am still going to be here. I think you mean Luca or Vodafone.
Luca, yeah. Right, let's have a look. Now, my concern is to the upside because I am short calls going out to June, September and December, which range up to about 6,200. So what would really hurt me tonight would be a 2% rally. That would really hurt. So I want to protect against that. I don't think it will happen, but yeah, what's 2% above here is like 5,750. Oh my goodness, very unlikely. So what have we got? What's more likely is a kind of up 1% from here, do you think?
Well, I was just looking at our pals over at Tasty on the ES contract.
Yeah.
And we've got an expected move there of 57 points, which is
1%.
Yeah, 1%. So those at the money straddles pricing at about a 1% move. Your 20 deltas on the call side for this evening up are about 57.05. Seems quite high.
50, yeah, well, so Axel thinks there's a lot of resistance around 5,800.
So 5,800 on a 0 day, you're way out of the money. I mean, it's just, there's absolutely no premium. You could sell them supposedly for 50 cents, it would look like, but that's only a 2 delta. So you've got a 98% chance of being right on those, which you take every day of the week. But for 45 cents, is it worth it?
So what is worth it then? 20 points, 25 points for buying the at the monies, 5645s. I wonder if we can sell puts to get any of that 25 back. Let's say we buy 5645s for 25, and then sell 2 of the 5710s.
5710s are outside the expected move.
Yeah, okay, so selling 2 of those gets us 10 points back.
That's half your money back.
So we've spent 15, and then selling, yeah, right down at like 5,550, maybe sell one of those.
5,550.
And you're down to 7 points. So you get 7 points for...
I mean, you can maybe even come up a little bit. That's only a 10 delta, those 5,550s.
Yeah, true. And it'll be much better for me if it goes down. But if Powell comes out as Powell should, right, and he sticks to the data, and he goes, look, I can't do anything on rates right now because we just don't know. We're so uncertain.
Yeah. I think that's the base case. I think he's gonna. If you were having your job threatened, right, as he's had, and he's taken a lot of political shtick over the last couple of weeks, yet the White House, we still don't know what tariffs look like.
Yeah.
What's more disruptive, cutting rates and then having to hike them back up again, or just staying where you are?
Exactly.
I think it is safer for them to stay where they are for now, because they can always do an emergency cut if they need to.
But will he signal the will to be aggressive on cutting rates?
Well, I think we know
if the labour market starts to deteriorate.
But I think we already have that type of signalling, don't we? We already know that
Not
they're
officially from them.
not officially. They've never mentioned cutting, not once.
No, he has to move his language in the statement to be more. I think it was Morgan Stanley that talked about it actually. Excuse me a second.
Well, where they say, we need to be more accommodative, because they could say something like, we're keeping an eye on inflationary pressures, we're keeping an eye on the economy and the labour market, and are ready to be more accommodative when the opportunity arises, or when we need to be. Because they can just say they're going to step in as and when they need to. And that would do enough, I think, to signal to the market that, he's not got his blinkers on, he is paying attention, and he does know that out there on Main Street, it doesn't feel quite as rosy as Wall Street reckons. Yeah.
Very true. Morgan Stanley saying possible that they will downgrade economic activity to moderated from versus continues to expand at. So economic activity moderated from rather than continue to expand. The Fed may also know elevated risks to the dual mandate. So that's the one that I think he brings in.
And just remind everybody of the dual mandate, that's inflation and the labour market.
Yeah, 2% on PCE, not CPI, and a full labour market. So no target, but people talk about it being 4%.
Right, okay.
Statement could note that uncertainty remains high, but has increased further.
Yeah, as Neil mentioned, Powell said on the 16th of April, we're in a wait and see mode.
Yeah.
Now, bearing in mind the market's bounced since then, and so it's probably got less of an eye on his Robinhood account or wherever he's got. But yeah, I think they wait. I don't think there's any risk of change this evening. We'll see.
Eric Jones not a fan of Powell.
Have you mentioned how awful he is at what? Being governor of the bank?
I think that's exactly what he means. Right, you want to take a look at Hers and Hims.
Yeah. As per Monkey Man's request, we're going to take a little look at HIMS. Of course, they had a 20-odd% move yesterday on their numbers. Let's have a quick look. HIMS and HERS. And I want to have a quick look at news. So this is the Tasty platform looking at their news as opposed to the IG platform. But this came out yesterday. They'd reversed their pre-market falls to rise as much as 10.7% when this was posted. But as Monkey Man rightly pointed out, they finished up about 20%. HIMS and HERS, for those that don't know, are a sort of online pharmacy-ish for healthcare products. So think about it as Herbalife meets Eli Lilly.
Oh, God.
Right? So it's kind of a health-conscious brand. But they do a lot of GLP-1 drugs. So obviously we received Novo this morning. This is one of their distributors. And so they said that Q2 revenue is going to be between 530 million and 550, which was below expectations. But they have been given the all clear from Novo to sell more semaglutide of the drugs. Anyway.
Up 93% year to date.
Yeah.
What a stock.
So they've been doing really, really well. Is there anything to look at? What should we have a butch at here? We are right on the Tasty view of the 45 days. We're on a 44-day expiry.
It's rolling day.
And on an IV rank, so the expected move in 45 days is $13 on a $50 share price. So that is 20%, another 20% or so.
Yeah.
And their IV rank is high up here at 50.9. So for those that are kind of new to this terminology, when you're looking at options, implied volatility is the vol element on that. So it gives options value. Lower volatility takes it away, higher volatility gives it value. And specifically what IV rank does is it looks at historically how much vol does it have now and is it high or low compared to its historical averages. So think about it like an RSI. 30 to 40 is quite low, 50, 60, 70 is quite high. And so even though it moved 20% yesterday, the IV rank of 50 is okay, I suppose. So if you're looking at any form of option strategy in here, they're fairly well priced.
Now, to hear more on this, you have a chance to meet the founder of the company, Tom Sosnoff, and his sidekick, Bat, who we saw the interview with yesterday. And all you have to do is go to the link in the chat. This is a free for all. Not only is your ticket free, but I'm buying the drinks. So with my profits from the what was it, April the 9th, 10th, on the 50 times 0 DTE profits, I am buying the drinks on this. You can sign up here. We've just put that Eventbrite link into the chat. It's in East London. We're going east.
Yeah, Acne, mate.
And yeah, it's going to be a great fun couple of hours. So it's not a presentation. It's nothing dull like that. This is hardcore trading, and it's real positions, real money. And myself, Bat, and Saws are going to be up there. Yeah, getting some trades done.
Yeah, it's good. You know your way around the platform a little bit more than the last time we did this, I think. For those that are new to us, we took Tom and Rich on tour up and down the country in November, and it was an hour session of live trading where Tom would walk up and down the room and talk to clients and talk to guests and shout trade ideas at Rich, and Rich was his execution monkey. And the trade errors got progressively less, I think, as the week went on. But we were up in Edinburgh, we were in Manchester,
yeah.
We did London, we did Dublin, and we did Birmingham. So yeah, we were all over the place. So that'll be good fun. I'm not going to be there, unfortunately.
Oh no.
I'm on a stag do. So I can't tell, just in case my best man's watching this.
Oh really?
No, sorry. I'm his best man, and yeah, I can't tell you. I'll tell you off air.
Okay. Right. Let's get a poll as to where Luke's going. Is it been your choice completely?
It's completely my choice. Yeah.
Nice. Right. Okay. 8:30. It is time for Matt Arbour. Angeline will be in here with Matt in about 2 minutes' time. Thank you very much for joining us, Luke.
Thank you very much for having me.
I just want to hear where the
stag's
where
going.
the stag is. Right, we shall see you after this break.
See you in a bit.
Hey, welcome to Live from the Trade Desk with myself and Safe Barber.
Morning, Ange. How are you?
I'm good. I don't know. Usually it's us that brings the tone down. Not
I
today.
was going to say, look at this chat,
I
with this
know.
drag talk.
We leave Rich and Luke and them for a moment. It's all about Amsterdam
No,
and Thailand. And Eric Jones, was it you with that comment which suddenly got pulled down? We saw a sudden movement there. Was that you? Right, any questions from Matt Arbour, our head of volatility, do put them here and make sure you hit the like and subscribe button or send them to us at IG.com. Did you see that interview between Carney and Trump yesterday?
I didn't. I caught the press. It's about the 51st state, which is always goes down well.
It was unbelievable as well. The fact that he just tapped him on the thigh and just went, you know, never say never when it comes to you know, whether or not Canada might one day be part of the US.
Yeah, it's
Even though after Carney went, never, ever, several times, it has to be said. Yeah, it was a crazy exchange.
And of course, Mark Carney will never make a decision on anything. So even if he wanted to, he wouldn't do it during his term. So there we go.
Yeah, but watch it just for the, I don't know what that muscle is, trader friends. Maybe you can tell me, but as Trump's talking, you see that almost like a clenching of teeth with Carney, and that's that muscle, and he looks like
nervous.
well, it looked like he wanted to punch Trump, you know, which would have been quite spectacular if that did happen. Speaking of that, gold. And also markets, lots and lots of movement there ahead of, I know you say it's not exciting, the Fed day, because we've talked about this to death already, but...
yeah, it's a Fed day, you know, a Fed's as exciting as your average tweet from the Donald. I suppose everyone's waiting to see what Jerome is going to say. No expectation of any move on rates, but always some interest in the press conference on the half hour. So don't be disappointed if there's no movement until then. But I think we will see reactions when Jerome starts speaking.
5 people on our poll, on our chat. We had a poll earlier on asking, you know, what they thought, whether it's going to be a hold or whether there was going to be a surprise cut, because apparently there's some mood music out there. Not much, as we said, but 5 people in that poll said there might be a cut today. It is, do you guys know something that we don't? Please share that here. Do not be shy, trader friends, because we would like to know. Currently some 30% chance of a cut in June. Can we flash up the poll again, Phil, or is the poll... Okay, there we are. Read it out for us, Matt.
There he is. When is the next Fed rate cut? 31% in June, 31% in July. Only time will tell. 21%. Today, 14%.
Yeah, you see?
Look at that.
Yeah.
Interesting.
Yeah, out of 41 votes there.
I don't think we're seeing any rate cuts until year end. Jerome's sensible guy is going to wait to see what tariffs actually come in and what the effect is there. Tariffs are inflationary.
They are, and it doesn't take someone with much in the way of economics degree to understand that.
It depends if you're reading the tariffs as an economic shock and you need to kickstart things and kickstart spending. But I don't think that's the way Jerome is thinking at the moment.
We asked earlier on, wow, if there was if you guys really know something, you 14% out there. How would we trade this? I guess short dollar and pick up a load of equities.
Well, yeah, I think it'd be a harder play perhaps in equities. The dollar trade would be the trade. The confusion on surprise for equities tends to be quite high. You know, you get the initial move and then a sharp reversal, often with surprise.
Andrew McKelvey piping in, saying, I had a Bloomberg guest saying that he thought there would be a cut today.
Very sensationalist on Bloomberg, aren't they? Trying to get viewers.
Yeah, don't trust everyone that goes on Bloomberg, I say with a wink. Hey, but you can trust everyone on Trade Lab with IG. For a helpful hint there, Andrew, and that naughty wink look at my bio. One country that has moved on rates, China, right? They have put more cash into the banking system, expanded a channel for insurance money as well to hopefully flow into stocks. Well, that's the aim anyway. Reaction was a bit muted. I was watching out for that across the board, but I guess it's all about wait and see until the Fed and this US-China talks.
Well, yeah, what becomes of the mooted talks later in the week? I think Friday's the date now, isn't it? So that always, try and get some news out over the weekend. But how much comes? Are the Chinese really going to engage with Donald, or do they kind of see it as a means to gently humiliate the guy? I think that's the play. Let Donald come out and make some bombastic statements, and then sort of quietly cut them down and not engage.
The Chinese have this saying: so watch what or listen to what they say, and watch what really happens. I think this is kind of like the stance that they are using at the moment, because we've seen with Trump, he might be punching with one hand and you're kind of looking at this hand, but actually what he's grabbing with the other is what he doesn't want you to see.
Yeah.
So yeah, it'll be interesting. And also the eye of Sauron, the eye of Trump. Now, the crosshairs moving over to drugs. I mean, to be fair, he did highlight this.
Well, everything's been cloaked in fentanyl from the start, hasn't it? Those are the reasons. We're back. There. Can't get far away from this talk of narcotics. But those were the reasons for tariffs. The Mexico, Canada, the sort of spurious that the fentanyl trade's coming from Canada. All these drugs washing into the country, and this is why we've got to clamp down on terrible Canadian trade. It was the initial smoke screen, and I suppose maybe going back to that because there's no momentum really. No one has come to the table to engage on tariffs correctly. I think there must be a degree of worry that there hasn't been the engagement. People aren't folding, waiting for the dominoes to fall, someone to come and offer the US whatever it is they're looking for, whatever the deal, whatever the bargaining card is there with the tariffs.
And this is why I think gold is going to continue edging higher. I mean, it's about, let's have a look at gold now. Last time I checked, it was about $100 an ounce below last month's record high. Let's have a look here to the gold price now, because I think we could potentially see gold, especially if we do get some sort of dissipating of tensions between the US and China. We could see this move ever higher. Of course, there could be disappointment as well if nothing happens. We are now also in a space where last time I checked, the dollar was weaker as well going into the Fed. Let's take a look at volatility.
Yeah, interestingly, going into the Fed this evening, US index vol isn't noticeably much higher, but dollar yen vol is higher than one might normally see ahead of a benign Fed meeting. So suggestion is that's where the action's like to be. Sort of joining up, I think I saw a question on the chat asking how to read what an expected move is from the options price. The way to do this, look at the at the money straddle, so the sum of the puts and the calls. So
42.3 and 45.
Yeah. So we're saying sort of about an 80-point move. That's for an 8 p.m. this evening. So that's post Fed, post press conference. So a 90-point move there actually. Math's gone to pop on dollar yen. So almost a full cent. So that's the way to use the options pricing to actually articulate what it means in real times. Like people invariably like to talk about the volatility number. That's an abstract unless you look at that every day. Go to that central strike. There's the helpful line on the platform across the center, and that is giving you an expression of the number of points expected to move.
Can we make that line yellow for me, please? I'm petitioning for that line to be made yellow.
I'm sure there are people who would call themselves online platform experts who say, but yellow would be a jarring colour against the red and the blue. You don't see much yellow on the platform, do you?
No, you don't. But you see a lot of white, and I like the black, dark lit background. I just think yellow pops a bit more.
I don't like the dark background.
You don't like the dark background.
I like the lighter background,
Trader
and not a lot of people know this. You can change the colour of your background.
You can change it. So we need a poll on this.
Let's have a poll. I've always been interested. I've
hated the white background for such a long time. At Bloomberg, the background by default is black, trader friends. It is black, so it's easier.
That's the Bloomberg calling card. It's always been the Bloomberg calling card. There's no choice.
It's so that it's easier to spot the ladder. If there was yellow there, and also those who are colorblind won't be affected because yellow is a non-colorblind, usually non-colorblind. But it's interesting. I'm glad you brought this up because it's interesting. We're talking about the straddle as well last week. How it always surprised me, especially for the US 500, how mystifyingly accurate it can be sometimes right? Especially when we're quite close to expiry. Let's have a look here to the indices. So US 500, and have a look yourself as well. You know, don't take my word for it, but you know, have a look at, for example, this is.
Ping on the daily. So
Yeah, there you go. And then, you know, the figure on the where my cursor is, 27, add that to 28. And then depending on which direction. I mean,
of course, you're quite right, Ange, to go in, and that's where I was going there. They're the two things you can imply from the pricing. There's the at the money straddle, which gives an indication of the expected total points move, and then there's invariably a skew on the prices. So either puts or calls will be more expensive, and so you're looking out the money, so you're looking down at things priced, you know, generally below 5, that kind of number, and you know, for the same number of points away, are the puts more expensive or the calls more expensive? The market generally on indices, puts will be more expensive. There's a natural bias towards puts. Again, teaching people how to suck eggs, but for those who've not heard this before, generally, pension funds are allowed to buy options. They can't go short equities. So the only way to protect portfolios is to buy puts. Puts are generally more expensive than calls because there are natural buyers of puts out there. Natural buyers of calls are speculators. Natural buyers of puts are rolling over hedging positions. So generally you see that skew there. You know, if you look at something like oil, you might get different skews. Commodities, you know, price shocks on commodities tend to be on the upside. Although the natural hedgers of commodity positions like prices going up, but it's interesting to look at skews. Generally, if you're seeing a skew on an index where the puts aren't more expensive, that's very much telling you something. And we kind of saw that going into US elections. There was a skew to the upside. The spike risk was seen there on the upside. I imagine if you'd looked as all of those people on the right Telegram chats and with Scott Besson, you ahead of April the 9th, that I imagine calls became much more expensive on the S&P ahead of the confirmation that the tariffs are being.
Yeah. But also what's interesting is last Thursday and last Friday, I was looking at the close and calculating this at about 1 p.m. Our time, London time, with Jack. And then we compared it to the close. This is specifically, Trader Friends, specifically for the, just to be clear, this is for the US 500. And it's actually really close. It's pretty close to, you know, what the close is. Obviously, I know lots of our Trader Friends have asked, and those of you who haven't heard, I always get the question, Ange, how can you guarantee, like, is there a way of reading and guaranteeing the direction? I wish there were. Maybe.
Well, is there a way of guaranteeing direction? It's an interesting thing, isn't it? Because in essence, markets are simple. They can only go up or down. Yeah?
Yes.
How hard can it be on a 50-50?
Yes.
But of course, there's so much more to it. Yeah.
Of course. So that's why we say, you know, make sure you know your market. Make sure you, you know, stress test. Make sure what, you know, why do you, you know, ask us, you know, every day, sort of like, oh, what are you stress testing today? So that's why we do that in each instrument is, as you heard Matt rightly say, different.
Each instrument is different.
Right. Kieran McKenzie saying, I remember something about a Canada pension fund shorting BT. So is this UK only?
If you're in the UK, your pension money can't be short. I don't know about Canada. Obviously, you know, these large the old Canadian teachers fund owns half the infrastructure in the UK. They tend to have different rules. Again, this is often talked about in the UK. Why can UK pension money not own infrastructure? You know, it's this rules about holding listed assets and how much have to be listed rather than unlisted. So rules are different. I'll be surprised if they could probably, I suppose you can short BT, you could trade options. Maybe the rules are different in Canada. I don't know, but it's quite possible. UK money generally,
UK
and
specifically.
US mutual funds can't go on the short side either.
And I find as well, Kieran, please correct me if I'm wrong, Trader Friends, any of you know there, UK pension funds tend to have more, I believe the term is covenants. So they have more guardrails compared to our transatlantic or our Atlantic counterparts over there. But yeah, if you find out about Canada, let us know. But it is well worth noting, you know, that there are guardrails in the UK, especially even with trading. We all know that, right? And Kieran McKenzie saying thank you. Fair enough. Thank you very much. Monkey Man saying dyslexia, people struggle with white backgrounds. No, I'm just kind of blind. I don't have dyslexia. I just have extreme astigmatism. And so, like if Matt and I were in a club and it had lots of ambient lighting and underlit, you know, cocktail table lighting, this would not work because I'll see 5 of him.
There we go, dark mode coming out at 65%.
Oh, way! Wow! Welcome, you dark mode people. I am one of them.
Yeah,
Yeah.
it's just always interested me as to what the default is. Yeah, I'm just sold. I just quite like the cleanliness of the white screen. I find it jarring when apps default you to the dark screen.
I'll stay on the dark side.
But there we go. It's all about choice, isn't it?
It is all about choice. And yes, you can change it on the IG platform. Do like and subscribe, and please do that, because we are waiting on our sponsorship from the London Stock Exchange. I'm going to speak to some of my mates at the LSE and also the London School of Economics as well, to see whether they would like to sponsor us and therefore get us a new bell. So like and subscribe. Kieran McKenzie, Canada Pension Plan Investment Board, short 0.8% of BT. Thank you very much from
I was going to say,
Rich.
bet they wish they were short more BT, eh?
Yeah. Let's have a look at BMW, because BMW is down.
Germany was interesting yesterday, wasn't it? In a market where there wasn't a lot of interest, we had this kind of mid-morning drama with the sort of the vote, the ratification of, I can't remember his name, Merz. And this kind of at one point in the afternoon, I'm told by those who are watching it very closely that DAX vol really spiked. There was an expectation coming out of traders in Germany that this was heading for a second sort of no confidence, and intraday DAX vol was trading over about 50%, which is, you know, quite unusual to see on a day without any specific numbers. Obviously nothing came of it, and vol came off quite sharply after, but there was, you know, that kind of nature of jitteriness around the market, and we saw it on there. Just to bring up a daily chart of the DAX from yesterday, we saw some quite sharp moves. You know, even on individual names yesterday, I noted Rheinmetall, the sort of that German defence stock that has been dragging the DAX higher generally, sold off quite sharply mid-morning, and then finished the day up. So there were opportunities trading Germany yesterday.
Yeah,
certainly. It was certainly where a better part of the action was. There we go. We see that sort of sharp sell-off mid-morning, and then that spike in the
Let's take a look at Rheinmetall. You said this is
this is one of those stocks that kind of, I don't know, maybe I don't follow defence closely enough, but no one had really heard of until the ramping up of European defence. Okay, yeah.
Rheinmetall is like core of European defence. Our sacks and people.
There we go. Apologies to the defence purists.
Well, Rheinmetall is on most defence ETFs, and also it's one of the interesting names that if you're a European fund manager, you tend to not say it's on your.
You lie, yes.
On your books, you just
your ESG box.
Yeah, and the dining conversation tends to die if you talk about this or Thales that's on your books. But it has been on a tear since we saw the whole Trump administration starting to say, or very clearly saying to the Europeans, you guys, you're on your own unless you stump up more spending.
And has rather dragged the DAX higher with it. It's been responsible for a lot of the performance in the DAX. On that same vein, I noticed this morning, and just looking at the leaderboard on a fairly sort of moribund FTSE, that tobacco stocks are back at the top, and the kind of tear up sin stocks again. No one mentioned having tobacco in their funds. No one mentioned having defence in their funds. BAT's Imperial Tobacco have been on an absolute tear over the past 6 months.
Yeah, and also, you know, what's interesting is we're seeing the same sort of movement with sector peers. I think, was it Philip Morris?
Past 6 months, I look at that terrible spike on BATs.
Here we are.
Yeah, sin stocks back in vogue.
Yeah, and I remember the times in the 80s when it was okay if you were in advertising to have 2 of these big names like on your books. It was fine, and they had so much money awash with cash that the likes of Peter Stuyvesant and also British American Tobacco, you know, sending pop concerts and pop stars, you know, Michael Jackson, Boyzone, UB40, all those all across Asia, and sticking, you know, the advertising just everywhere with, you know, cigarette advertising. It was okay as well. Just reminiscing here. At that time, Formula One to give away all sorts of tobacco merch. Not anymore.
Well, no. But, you know, I always think of it on UK sports events, all sponsored by tobacco, all sports by the snooker that, you know, obviously still, people still like to call it the Embassy. The Embassy World's Embassy even there as a brand to smoke. I don't know. Now replaced by gambling companies, of course. So it's still there. It's still that end of the business. No, but it's that interesting. It's kind of the interesting shift that you know, that perhaps Trump left or Trump led, and that general pivot in a portfolio. That portfolio of sin stocks, the performance this year
is sin back. And on that note, we pivot gracefully from that to insurance.
I was going to say, where was the sin pivot?
And you know, savings and investments and retirement products, because we have a request from Steve Davis to look at Aviva.
Steve Davis, there we go, back on the snooker.
I don't know much about snooker. Is there a Steve Davis?
Is there a Steve Davis? Good
Lord. Aviva, taking a look at this, of course, Aviva, Steve, is one of those that is on many pension funds because it is a strong, stable stock. But if you're taking a look from a technical viewpoint, you can see here that the trend, especially from mid-April, is upwards. We see a lot of strong green bars there. And also the thing with Aviva to take a look at as well is that we have seen this brief correction here after what looks like a triple top. I know what you're going to say.
What's that relative to the FTSE? That's what I'm going to say.
Yeah, I know what you're going to say. But in the short term, this still looks like it has room to go. Unless we see volumes really, really, you know, take off there, because then that is a concern, because it could be a false high. We could see, you know, easy momentum if you see volumes come down. What's
your story on Aviva then? What's dragging you to Aviva in that sector above others?
So Steve was asking what the technical view was on Aviva. But if you look here at the moment, having a look at Aviva in terms of the longer term, it is a slightly different picture. Have you got a view on Aviva? Was that written?
That's it. I'm trying to think if I think my car insurance is with Aviva at the moment. That's my only view. My only view on it is I'm paying them some premiums. In terms of the sector, like insurance sector, it's one of those.
Stable dividends, right?
It has stable dividends and like a lot of London stocks, and I suppose.
Yeah. So
thinking back to a couple of weeks ago, but discussing it with Rich in the sell-off, which became broad-based. The nature of that broad-based sell-off, there were stock picking opportunities, and stock picking sort of a kind of unloved art at the moment, like passive versus active management, and that trackers of generally beating active managers, Warren Buffett aside. But in that sell-off, stocks that were not tariff affected were dragged lower. I think there were quite a few chances to get inverted commas bargains because the market was a broad-based sell-off on the tariff story. So things like insurers, you know, various sectors. I picked up some gaming stocks in the sell-off. You know, this is not tariff affected. The market at times like that, at times of stress, moves in lockstock rather than stock specific.
And SR and I are going to talk about this later on. You know, in times of fear and everyone's selling off. You know, that's kind of like the time to.
That is the time, but it's being careful. It's not getting led into. So
Exactly.
it's easy. Okay, you would have done much better if you had bought Nvidia, but at that point. But the story was very much about Nvidia and the effect. The effects were tangible and very obvious. There was other stuff that had also come off, perhaps not as much, but had come lower, which there was no tangible effect of tariffs or no discernible reason why they should have been dragged lower, other than the passive index funds were selling the indexes are broad-based.
Okay, we have to leave it here because SR is coming up next. Thank you so much for joining us, Matt. And just one last note for Steve Davis. The longer term, if you are trading this longer term Aviva, I would urge you to look at, you know, some of the macro risks out there. Obviously, Aviva sensitive to interest rates, inflation, of course, economic cycles as well. So economic uncertainty there. And also, it has already reduced its exposure to faster growing emerging markets. But is that the right thing to do given major markets are now looking uncertain too? Right, we have to leave it there. We'll see you right after this with ISA for all sessions. Hey, welcome to the show with myself and Issa. Hello. Apologies, we got so carried away. We were slightly late for all sessions, but here they are for you very quickly. Take us through the winners, Issa.
So we had the big news about China having trade talks with the US, and so we're seeing a couple of these US names looking pretty strong. A lot of your general, like, it looks like a lot of the names that are going up are your general kind of high risk names.
Yeah, like the MicroStrategy, Coinbase.
A lot of these are just, yeah, exactly, Coinbase, Moderna. A lot of these are just like the names that when you have bullish momentum, you tend to see ride the momentum, and then maybe, I don't know if you can see some of the losers.
Yeah,
there.
here we go.
Upstart, wow, that must be I don't know, do they have earnings or something? That's quite a material move. I'm surprised at that.
Yeah, Upstart, though, quite volatile there. Let me have a check.
Yeah, they're one of those like peer-to-peer lending companies. I think similar to some of the buy now, pay later stuff, they're quite exposed to the consumer. We've also got, a couple of different ETFs. We have the VIX short-term futures are down. Again, doesn't feel too surprising given the positive soundings in terms of trade. I am surprised that we're not seeing things that reflect some of the news in India or Pakistan, but maybe that's one of the ones where some of those positions will become a bit clearer over the next kind of
maybe it was already factored in. Nick and I were talking about this earlier, and I think Diageo saw a bit of a reaction there, but Upstart, I just checked, it did move on softer than expected guidance and for the second quarter revenue. So that weighed on its stock there.
But I think the general move is very clearly flat to upside. So you can see actually very few names with red days. And I think where they are red days, they tend to be kind of things that are pretty clearly explained.
which brings us to this week, which has to be said. You know, with I was talking to Matt earlier, and we were remarking on the show as well. You know, it feels a bit like the calm before the next storm.
I mean, we did have 9 days in a row, 9 sessions in a row of up days, which is not typical, right?
It is not typical, and we almost wonder, it's been so quick, right? This move back up, whereas, you know, when we had the shakeout, we had, you know, tariff tantrum Tuesday and then blink Wednesday and all that, we thought maybe the shoe had dropped, but maybe it hasn't.
And I think this is one of those markets where you can make any story you want make sense. So I think if you are someone who thinks that that was like a short-term or even medium-term bottom, then actually you can look at some of the breadth statistics and see actually the rally up in the last kind of week and a half, 2 weeks has been very broad in the number of equities that have gone with it. If you are someone who thinks that that's kind of, we're now hovering at a local top, you can talk about how, like, okay, in bear market rallies, you tend to have these quite violent corrections upwards that tend to actually precede some of the bigger downward moves. And so I think this is one of those areas where you just need to be a bit careful about confirmation bias and not necessarily letting the story lead how you read the data, and trying to let the data
Lead you
how you think about the story. Exactly.
Yeah. And it's also a good week because we kicked off with Buffett
Yes.
at the weekend.
Yes, that's kind of what I wanted to talk about today, actually. I think the Oracle of Omaha often shares advice that is very like psychology driven. He's someone who has an incredible track record of making good decisions, especially during like heightened emotional periods. He's not a trader per se, like in the sense that lots of maybe people watching are traders, but he is someone who has a really thoughtful approach to timing and a thoughtful approach to trying to take the like signal to noise ratio of the data that he's seeing. And actually, I think beyond some of the moves that he's made, like a lot of his advice to people is like, this stuff is really hard, and if you don't feel like you can do it, maybe you should just buy an ETF and then I think do time in the market beats timing the market. So I think it's one of those things where if you can control how you feel and your emotions, then you can trade like Buffett or you can invest like Buffett. But actually for a vast majority of people, that's not true. And so then a lot of his advice for those people is really to kind of take a bit more of a just follow the ETF instead of trying to find a needle in a haystack, buy the whole haystack.
Yeah, buy the whole haystack and
exactly.
hope to get that lift. He is very, very, as you say, very true to form, and also very, very calm. I've seen him in action before speaking. I haven't met him, but I've seen him in Davos.
Yeah, my dad loves Buffett, and so I've, as a kid, even we've been like reading the shareholder letters. So it's just, I think it's one of those things where it's definitely the end of an era to move on. Like I think Greg Abel is
90 something, 94, is that right?
Yeah, 94. Yeah.
Wow.
Yeah, and I think with Charlie passing away last year, I think it's definitely. It's not a huge surprise. Greg Abel himself is like incredibly accomplished and has been kind of heir apparent for a very long time. And he himself is in his 60s. So it's not like we're necessarily passing to a totally spring chicken. So I think with that said, like it is still quite sad. And so one of the things I wanted to do is walk through 5 of my favorite Buffett quotes, all of which have an element of psychology, to them or in how he saw the world. So the first one was the one that I think everyone probably will be familiar with, which is be fearful when others are greedy and greedy when others are fearful. So this is often talking about how when you have heightened emotions in the market or heightened periods of volatility, that leads to often excess sentiment in either direction. And actually a lot of the really successful trades are kind of counter those heightened emotional plays, especially if your time horizon is a little bit longer than like a couple of days, for example. And so I think he was someone who, for example, during the financial crisis, bought an enormous amount of shares in a range of different companies, including, for example, Apple, which has turned out to be a
It's
huge
one of his,
play.
one of his best plays, right?
Yeah, one of his best plays. So I think trying to be aware of what the emotional state is of most people trading, and then trying to work out, is this a good opportunity to maybe be a bit of a contra to that, is a really, really effective way of trying to kind of control both your sentiment, but also think about how you respond to market sentiment. So I think that has led to a whole bunch of people trying to develop tools, like we spoke a couple of weeks ago about the Fear and Greed Index. For lots of reasons, I'm a bit skeptical about that index, but it's useful to try and keep a pulse check on how market players more generally are feeling, so that you can inform your approach and maybe take a kind of opposite contra view. Like Tom, for example, Tom Sosnoff, is famous for taking the other side.
Oh yeah, he's a contrarian trader.
Yeah, he's a
all the
contrarian
time.
trader. Exactly. And I think contrarian trading is something that feels very hard, but often is quite profitable, and there's often really good opportunities that people feel scared to take because it's against the crowd.
Yeah, yeah. And I like his point as well about, you know, how can I give myself positive skew, right?
Yeah, exactly. Yeah.
The best chance. You're never going to give yourself a, you know, get 100%.
No.
But how can I give myself the best chance, positive skew?
Yeah, and like ultimately, if all the swings you take have a upside skew, then over time your returns are going to have an upside skew. Whereas if all the swings you're taking are largely even, it's just going to be a random walk. So trying to really get some of that positive drift in some of your decisions is really important. So that was the first quote. Second quote: the most important quality for an investor is temperament, not intellect.
I like this. I like
So
this.
I think that is also a really, really great quote, and it speaks to the fact that even if you are doing fundamentals analysis, a lot of what is driving the quality of your decision making is the ability to acknowledge when like you need to be a bit more patient, or be clear about how you're trying to even like internalize some of the information you're receiving. Often, like we've spoken a lot about overtrading in the past. I think overtrading is a classic symptom of an issue around temperament as opposed to an issue around intellect. Often the people who are trading very frequently, even in ways that are a little bit unproductive, all the trades kind of individually make sense, but if you're trading too much, it might reduce your returns and reduce your ability to focus.
Someone said to me, you know you're overtrading when your cursor finger feels like it's hurting.
Yeah.
That's
a good. I think that's a good. I think the other one is like. I think there's something about your ability to take breaks. Where I think if you're really over trading, so there's a good form of flow when you're really locked in, and I think that's great. But there's also a kind of panicked lock-in mode that feels very unconstructive, and so trying to work out when you're in which is really important. Cool. That was quote number 2. Quote number 3: risk comes from not knowing what you're doing. So I think this is a good one, which is basically we talk a lot about the difference between uncertainty and ambiguity. So if you are aware of risks that you're taking and you feel able to like really take those in an informed way, that is a good example of uncertainty rather than ambiguity, which is where you might not even have visibility on what risks you're taking, or even if you do, you don't have a very good way of understanding what those risks materially look like. So trying to work out how you can convert ambiguity to uncertainty is like a very key way that I think Buffett used to think about material risk taking, like risk around, for example, like timing, or risk around position size, or risk around currency fluctuations.
Yeah, or you hear me talk about, you know, let's have a look if you're playing indices or, you know, any of these stocks. You look at the options ladder. Let's have a look and see what the option market is showing me.
Yeah, exactly. Yeah, use the information that's available to you to try and crystallize and collapse some of that ambiguity into some degree of measurable like uncertainty. So I think having implied volatility moves is like a really good example, or like your expected moves using option pricing is a really good example of trying to understand on different time horizons how much is being priced in versus not. You can also use things like correlations especially when they swap, to understand what regime you're in. Like those kinds of things can like really help crystallize some of the uncertainty.
And thanks to you, my family now think I'm crazy because I've started voice recording myself. And
How is that going?
It's going mad. I'm on the bus and then I hear my own voice telling me, you know, come out of gold if you hit this resistance point.
Yeah.
Because
And how do you
dot.
find that? It always feels different when you hear it from yourself than when you read
it
it.
feels weird, but it
Yeah.
it helps you almost make better sense of it because you've talked it back at yourself.
Yeah. And also it's much harder to move the goalposts afterwards. Because
Yeah.
like you can literally hear yourself
Yeah.
say the thing. Which
And
is
then when you get it wrong, you're like, why didn't I listen to myself? Why?
exactly.
Why?
Okay, fourth quote. We're going to get through all of these. Fourth quote. What the wise do in the beginning, the fools do in the end. Which I quite like, which is all about this idea of like trying to be a bit more forward-looking in the actions that you're taking and trying to think about the sequencing of some of the actions you're taking. So I think a really good example is thinking about your exits options. The wise do at the beginning and the fools only do after you've really opened your position and kind of have been in a position a while. So I think whether or not you execute your plan, it is really important to have a plan to execute. And so I think there's a whole bunch of things there around timing and patience that I think are important, but like that one is one that I think resonates with me. And the last one I have, which is one that is less about trading and more about like how we do an activity like trading, which is quite high cognitive load. I insist on a lot of time being spent almost every day to just sit and think. This is very uncommon in American business. I read and I think, so I do more reading and thinking, and I make less impulsive decisions than most people do in business. And I think that time to think is something which is really important, especially when you're trading and especially when you've got a very intense period of market hours, like trying to either carve out within that time or outside of that time, the time to properly like plan ahead, review how your portfolio is doing. Like,
how do you carve time out of, for example, you know, really a lot of our friends have proper jobs. And they're, you know, trying to squeeze in trading, you know, in the morning. I know someone who does it really early and then clocks off. I know someone else who then comes back from work, you know, changes and then tries to trade after work. How do you carve out time? Because you've got family, you have, you know, house admin, all sorts of bills.
I think it's worth saying, like, as an acknowledgement, it's just really hard, and it can be. It's one of the reasons that actually such a high proportion of the population don't invest at all, is because they just can't carve out the headspace to do that. And it's why also lots of apps like automatic savings apps are very popular, because they kind of try and remove some of that mental overhead. Specifically for trading and investing, I think a few things that I would do is, number one, I would acknowledge the value of the thinking time. I think that's something that Buffett was very good at doing, is like, actually, this is not time that causes like low effort. I think Kieran has raised the concern around like overthinking. I think that's a totally reasonable concern.
I think that's my biggest downside. I can overthink. And then I have to put stickers to remind myself, don't crystal gaze, don't prophesize. Right?
So I think there's an element of also structuring that time thoughtfully and effectively. So I think trading journals are like a really good way of doing that, and then reviewing your trading journals at a regular date, like maybe saying like, okay, every time I make a big trade, I'm gonna write in the trading journal, and then every 2 days I'm gonna actually review the stuff in the trading journal and see myself, with the benefit of 2 days, has that really like influenced my perception of like whether it was a good or bad decision or not. And then you have a little bit of perspective taking, so that's really important. So setting that regular cadence is important. The third thing is, it's really important to actually block the time. Like, I literally block the time in my calendar to think. And that's because otherwise stuff just creeps in.
Or someone else adds a meeting, or
and it's hard, right?
And life happens.
Yeah, exactly. Life happens. And so I think really being deliberate about blocking that time is really important. And then I think the final thing worth doing is like retrospectively looking back at where you did block the time and try to appreciate like the value of that, because it rewards your brain to do that again in the future. So like, if we think about habit formation, the things you want to do when you're trying to trigger a habit is the same as any both bad and good habits, which is cue, which is what is the cue for you doing the behavior. So the cue for having some thinking time might be to take a break, for example. Then craving, like how do you make the behavior something that you want to crave? Then there's the behavior itself.
Keys, in my point, in my case.
Exactly, yeah. And then, well, no, craving is more about trying to create the ambition to do the behavior.
Oh, so you don't reward yourself.
Don't reward, yeah. You shouldn't reward before. Q, craving. Craving is all about trying to make yourself want to do the behavior. Then you do the behavior, and then you give yourself a reward.
Right.
And then the reward reinforces the behavior.
Damn, that's where I've been going wrong.
Yeah. So trying to preserve the reward for after the behavior is really important. And then it also then reinforces the cue that you have. And the more you do that over time, it's cue, craving, behavior, reward. Like that's how every habit forms, whether good or bad. And if you want to break a bad habit, you just have to break one of those chains, either the cue, the craving, or the reward. And if you want to build a new habit, you have to basically slowly build all of those bits of the chain.
Interesting.
Yeah.
The other key point with Buffett, one of my favorite quotes from him is probably one that no one knows or no one remembers.
Oh yeah, what's the quote?
He said, predicting rain doesn't count. Building arcs does.
So it's less about event prediction and
Yeah.
it's more about buying the companies that will benefit from those events.
Yeah.
That's interesting. I think
Which I thought would kind of resonate with you too, because
Yeah,
you're a
for
regime
sure.
trader, right?
For sure. Like, I think you can be right about like inflation, or you can be right about like economic growth, but if you don't have the right positions, you can actually lose the trade. And like there was one of the periods that was really tough recently is where actually both stocks and bonds went down. So a lot of the people who were like, okay, we're going to have a period of correction, and this was in 2022, 2023, like we're going to have a period of correction, like I'm going to get out of growth equity, got into bonds and got absolutely hammered. And so like even in that situation, you can be right and wrong at the same time. And I think that's worth thinking about. The other thing worth thinking about is like often when you're looking at especially macro based trades, like being bearish feels really smart, but being bullish makes much more money on average in the long run. And so like trying to also like push against whatever biases you have, like I have a bearish lean, I know you have a bullish lean, like being aware of what those are
We're
can,
the yin and yang here.
can help you make better decisions, right, ultimately.
Yeah. And also time frames matter too. Like my time frame for long-term and is very different from my position for short-term, weekly and.
Yeah, of course, right? And like you're in different headspaces and you need to really think about like how those headspaces impact your different behaviors.
Daniel Vermeer saying, has there ever been a study done in relation to time looking at your screen and trade outcomes? That's really interesting.
Yeah, I don't think I've seen a paper on it. I see James has said there's one about trading on phones, and it turned out they performed worse than those who didn't trade on the phones. That's interesting. I think
Yeah, maybe we should look into that the next time, because tons of our clients trade just purely on their mobiles, on their phones. I was surprised when I met some of them and they didn't even know we had an online version.
but you only trade on web, or you do both, or?
I do both. So I like our very clean and very easy to use platform on I use a laptop. But if I come out of trades, then the mobile. So it's mobile is like the unwinding.
I actually primarily trade on mobile.
Right.
Yeah.
I like, looking at the charts and drawing lines and
Writing
reminders.
I think often like I will have stuff that I've been thinking about or queued onto a watch list for like weeks. I'm just waiting for the right entry.
Right.
So I think that's where like having the easy access on mobile when the right price hits is like great. And then I think and then trying to use that balance with things like stops and limit orders, I think is also kind of a key way that I trade.
Interesting.
Cool. And then I'm just having a look at some of the other comments. Some stuff about Fantasy Premier League.
1 hour only per day more profitable than somebody that has 7 hours a day, or vice versa?
Yeah, there is some stuff on like motivation to think. We spoke in a previous show about how we can, Daniel, can we post questions or email? Yeah, you can. There's an email address, right? That you can email questions in. We should do a Q&A segment.
Yeah.
Yeah.
Yeah, let's do a Q&A section segment with Isar as well, because we've got ton of questions. Not now, because I heard that Dylan is on the phone from Milan
so
and getting ready.
Perfect. And then maybe I will love you and leave you.
Oh,
But it was lovely to talk about Buffett. I think it was definitely end of an era for him leaving as CEO. I think he has lots of wisdom that I'm sure he'll continue to share.
I need to pick your brains on Greg. I don't know much about Greg.
I mean, we can chat about it offline, but
Yeah.
he's a super experienced operator. And
Give us a like and subscribe, and make sure you ask us questions. We love your questions, because that you are part of the show and part of this community, and we will try and get them answered live. If not, email back to you after the show. Thank you so much, Isar.
thanks.
Hey, welcome back to the show with myself and Dylan Rattigan, all the way from Milan. Dylan, we've missed you. Where have you been?
I know. I went to America. They took me hostage. I went for a minute, and I tried to just say a quick hello, and then it's hard to get out of that place. I'll tell you, my God.
Very naughty
but
like that has happened to me too. We're glad to have you back. I was very worried there, very worried. And speaking of which, I should be too, because as you saw in that advert in the break, trader friends, the Tasty Live trading event in Milan is headed your way, June 23rd, 2025. Give us a rundown of what to expect so far. You're the brains behind the event there.
Well, I just invited my friends. I thought it was time to bring my friends. Instead of having to go to visit my friends, I thought I'd bring my friends to me and share them with everyone else. So Rich is coming, as you know. He's a friend. And Tom is coming, and he's a friend from Chicago. And I'm not quite sure who else is coming. I was hopeful that you might turn up, but maybe you might not be a friend. That's unclear to me at this point.
I am even more than a friend. I am showing up earlier to help to give you a
Okay, your
hand.
preview. You're the advanced team. You're like you're the presidential advance.
I am the presidential advance. I'm going to be there ticking the boxes, checking everything's all good. The wine's great, expensive enough.
Testing wine taste. We're the wine tester.
So I will be with you end of this month, sharing the link with you guys, because please take advantage of this. Those of you that mentioned to me yesterday that you haven't got your passport sorted out, the UK has revamped its passport renewal system. This is post-Brexit, so it should take you no time at all, so you have no excuse. The link is on the left-hand side here, so do click on it. Go to the Milan one. If you can't go to the Milan, go to the London one. If you go to both if you can, because it is.
Did you know that England has ESTA now for Americans and Europeans?
I do. I had to fill it out. Before I went to Chicago.
Are they kidding us?
I know, right? It's.
I mean, not that this is not the venue for complaints and issues with the British government, but if it was, I would have a list.
There's also going to be ESTA middle of next year onwards. Have you heard about this one?
No, lay it on me.
Well, because of the whole, Brexit malarkey and, heightened border control and everything, people outside of Europe will have to fill in a form and pay something like £17 each.
No, I had to do that. I had to do that this year.
Oh, you had to do that this year?
No, Americans now cannot come to England without an advance filing of a bunch of paperwork and without paying the king. We're ready to throw a tea party.
I know. It's the du jour, mate. I thought you had multiple passports like me, so I thought you were sauntering through borders.
No, but even an Italian passport or an American passport, everybody's got to file visa paperwork to come to England now.
Yeah. It's the way of the world, right? I mean, we saw the Berlin Wall and everything come down. Now it's going back up, just in different forms.
All right. Listen, okay. Right? It's a different channel on a different day.
Different channel, different day, but I am completely with you. It's so boring. It is so boring. Oh, thank you, producer Phil. It's wonderful here in London. You get given.
I could use. Where's my producer Phil giving me coffee?
Dylan's asking, where is his producer Phil? Oh, you got to come here then.
Producer Filippo.
Yeah. Well, listen. Tons of stuff. We got loads of trader friends. Obviously, we did a poll earlier on talking about the upcoming JP speech. That's the key event, not so much what is going to happen, but we had a poll earlier on of our viewers, and it's interesting. 14% thought there might actually be a cut today. I think it's highly unlikely, but just talking about this because it is interesting going forward, given we are now waiting on hopefully some concrete sign that the Chinese and the Americans are talking. Not going to believe it until I see something detailed there. How are you trading this?
The market sure does believe it. I mean, the market seems to believe that all these deals are going to get made.
Or do they just want to believe it?
What's the difference? I mean, it's all, the price is the price, right? The market is pricing it like nothing that Trump said in April has meaning.
I know.
And that all of it was a pretext for a big deal-making show.
Yeah. It was a buy the dip event is kind of what it feels like.
And a Trumpian sort of, Trump is all talk, and then it's all Trump rules for the theatrics, not for the policies.
One of the key things that we are also watching here is, the Europeans, since you're sitting in Milan, maybe you've heard, you're on the inside track. Dylan, I know you're tapped into many networks. Are we going to see some sort of European-US successful negotiation there this week?
I would love to claim that my position in Milan or my networks have the intelligence to answer that question. I believe I would say that everybody's going to make a deal.
Over here,
primarily because Trump wants to make a deal with everybody.
Yeah.
The whole thing is bullshit, right? The entire thing, going back to its outset, is it's a pretext for a show.
Yeah.
And so I create a problem that didn't exist. Then I'm going to undo the problem that I created.
And then run in on a white horse.
And then I'm going to be like, look at what I did.
Yeah.
And so, I mean, that's what I perceive in this entire situation, which at this point means to me that, one, the euro remains stronger because it's a referendum on the credibility of American leadership and relative rates, where rates are expected to come down in the U.S. and maybe not so much in Europe right now. I think what's kind of interesting is the degree to which there's a perception that the Eurozone economy, ex-Brexit, or ex-England, I should say, and ex-USA, which has always been perceived as this sluggish, bureaucracy-laden, slow-moving entity, which it very well is in many, many ways. On a relative basis, in the era of Brexit and Trump, suddenly the Eurozone is like a little bit peppy and a little bit stronger. And there's defense spending in Germany. And there's
and looking a bit more
value
radical. Germany loosening its coffers to spend more domestically, right?
Exactly.
So
I mean, that chart kind of tells the story, because even though the big move is behind us, if you want to call that chart, but the euro hasn't returned any of what it's acquired in terms of relative strength. It may have stopped getting stronger. But it has not reversed that big move, big April move.
Yeah, and it certainly is still way above, the resistance levels seen in September last year. So it's still a very strong move there. To juxtapose that and compare that, dollar still weak. Taking a look at the US dollar basket there and punching that up for you. I mean, this is part of the reason why gold is edging higher and still continues to be in that very strong upward trend. Let's have a look at some of the questions.
That's also the curiosity, because if you're going to have U.S. equities as strong as they are on a relative basis, and the expectation for the China deal making, the expectation for the European deal making, all those expectations, why aren't you seeing the dollar get a little bit stronger? And I would say that for me, the answer is, well, whatever the deal making is, it's all still evidence of impulsive and unserious U.S. leadership, which is inherently a referendum on the overall longer-term value of the U.S. currency. Yeah. And I actually believe that there's a preference in America for a weaker dollar as part of their tariff and domestic manufacturing agenda.
Yeah, I agree completely. And also the thing is, Trump 2.0 can afford to have the dollar weaker in the first few years of his presidency, but at the tail end, or year number 4, then we're going to see, I believe, a trickling up of the dollar and a strengthening there. And of course, don't forget as well, Dylan, we're still looking at perhaps cuts coming from June. I think it's 33% risk of a Fed rate cut at the moment is being priced in. But I guess the key thing as well is, do you think we're going to start seeing any of these, tariff impact really start to hurt corporate America? We have seen the Amazons, the Intels, right, coming out saying that they are gonna see a material impact. But do you think maybe we sidestep this because more of the we've done these
I don't know
deals?
about that. I mean, I don't
That's
know.
going to filter through.
I do. I think there is I think there is an impact already, and I think there will be an impact. I just don't know I actually think the impact is a certainty. I think what's uncertain is the degree to which it is short-lived, and that it's a buy the dip.
Yeah.
Metaphorically, right? That basically there will be an issue. There is an issue. There's an issue, right? There's a slowdown in the number of boats coming into Long Beach. There's a slowdown in the number of boats coming into Newark. I mean, but really more Long Beach and Oakland. That's a fact. The only debate is, well, is this going to go on for a long time? And I think a lot of folks don't think that it is going to go on for a long time.
Remind me again, because it's been some time since I lived in the U.S. Long Beach is where most of the Chinese, the
40% of all American imports.
Yeah, come
I mean,
through
that's
there.
where basically all the boats from China
Yeah.
come either into Southern California and then get on a train or a truck, which is the port of Long Beach, which again is 40% of all imports to the United States, period. And then the secondary is in Oakland near San Francisco, for obvious reasons, with the East Coast not being a major Chinese importing location for, again, geographically self-evident reasons. But for sure, the number of boats arriving in Southern California has collapsed.
Yeah. Long Beach as well. I saw data on that recently.
Yeah.
Do you guys
the
have
Port
like
of Long Beach is always the best.
spotters over there? Like over here, we've got.
I got my people on the docks. I got my people on the docks.
Even the Bloomberg shipping, they've got a Bloomberg shipping app which tracks the boats, right? It tells you what's on board, where it left, where it's due to arrive, what time it's due to arrive. They still pay people to double check, even though they have that app going on.
And even though they paused a bunch of boats in the ocean in the middle of this trade war, they made a bunch of boats circle to see if there could be a deal before they arrived. And then anyway, it's a real impact.
Yeah.
It's just the debate right now is, is it a short-term phenomenon or is it a longer-term phenomenon? Right now, I think the bet seems to be that it's a short-term issue.
Lots of trader friends asking you questions live on the chat here. Maturin saying, a couple of weeks ago, Dylan was putting forward a contrarian view of selling gold and buying oil. Is this still his view?
Yes, it is. Particularly the buy oil. I've been saying this with the guys in Overtime in America on Tasty Live. I don't understand how it is that you can hold the view of relative U.S. economic optimism, meaning mild slowdown, mild recession, as a preference to more severe slowdown and deeper recession, and have stocks trade the way that they're trading and sort of move through this the way that their stocks are suggesting that it might move through, and not have oil be stronger.
Yeah.
And not have gold get weaker and oil stronger, with the dollar being the sort of real the oddball in this. But we talked about the dollar a second ago. I think that's a function of broader policy preferences in the U.S. Treasury, in the United States government, and by the world as it is now dealing with the new American government.
And just to quantify this as well, Dylan, what is your time frame for this contrarian view?
I would say it's impossible for the equity markets to stay as strong as they are, and for the Fed, I don't think the Fed will cut today, and I think the Fed might even say the economy is more resilient in comparison to the rate in the face of all these external shocks. I would say in the next 30 to 45 days, it's hard to see how oil doesn't do better, not worse, not to mention some of the seasonal aspects of American summer driving and all the rest of that.
We got Monkey Man asking, and we had a poll earlier this week. What is your year-end prediction for oil? We had loads of people coming in and saying, 50. Someone else said 55. I went with 60 just because, otherwise the Middle Eastern, the Saudis, and the lot of them will get very angry because it then means that it's economically the word is fiscally unpalatable over there because they need to balance their books as well. Do you have a year-end prediction for oil, Dylan?
No. I've had decent success trading oil, but it's been entirely on tops and bottoms, trading tops and bottoms without a sense of of any strategic or long-term targets. Last year, oil was my best instrument, more on the short side because it would spike up in the face of World War III fears.
This is
That's gone away.
Yeah.
Now we're on these sell-offs on the economic slowdowns that may not be as bad as everybody fears.
Yeah, and I was talking to SR, and we've got Matt Arbour, one of our loyal guests that comes on twice a week. About where we think we might be end of this year when we're pulling the cracker here over at Trade Live with IG. And I'm hoping by the end of this year we're going to look back and see, oh, it was a year to buy the dip. That is my humble hope there.
Well, it's certainly in keeping with historical references. I mean, it's been a year to buy the dip every year for some time. I mean, I think you're right in general. The only question is the degree to which there's going to be a real material economic slowdown. But the more and more you conclude that that Trump and the Trump administration is primarily talk more than it is action, that mitigates a lot of the volatility and the negative aspects of some of the things that they say because they're never actually going to do them.
Dylan, there's a Russian term, isn't there, where someone's kind of like punching this side and distracting you, but actually what they want is what they're doing with the other hand. I kind of think that is what Trump does, right? Remember when we first spoke months and months ago?
Yeah.
And you were saying, do you think he's going to go through the tariffs? And I was like, yeah, because it's all going to be like, theater, smoke, right? I said he's going to bring out the velvet and he's going to bring out all the drama. But actually,
and then you get to do months of deal making.
Yeah.
And you're like, I'm the world's greatest deal maker. And then you go into the deals and you're like, hang on, this is the same deal that existed before he broke the last deal. And that the final deal that gets made will be very similar, if not identical, to the deal that existed before he blew up all the deals. But now it'll be the greatest deal in the history of deals.
How many deals did you say there? Was it 6? I counted.
I mean, he's going to do probably 500 deals.
Yeah.
He's trying to redo the deal with South Korea, where the deal with South Korea, there was the pre-existing South Korean deal, if I understand correctly, was no tariffs from South Korea on the U.S., no U.S. tariffs on South Korea. We blew that up and said, no, now we are going to tariff South Korea. And then we're going to try to go back to the deal where there's no tariffs, which was what the deal was before there was a problem. Anyway, I think that that's indicative of what's likely to happen across the board, including with China.
Speaking of contrarian, I do have a contrarian view, and I have a contrarian view which I'm showing you here. You heard me say last week that when copper was on its way down, that Shanghai, data out of Shanghai is showing that liquidity and supply is starting to be squeezed. This is a short-term, might I add, just whacking up my chart there, short-term view because I'm planning to take this off before the Chinese meet the Americans, if they do so. In Switzerland this coming weekend. But also Ryanair, EasyJet there, that was because oil prices I thought was going to continue weakening this week, but I will take that off as well before Friday. Spot gold should have taken your view, Dylan, because my long is now not doing so well at the moment. Perhaps I should have done a sell like your contrarian view. And sure should have.
Yeah, I mean, it's coulda, shoulda, woulda. That's the story of all of our lives when it comes to trading, especially. But I mean, I think your gold position is as rational as anything out there. It just got the reason I was net gold negative was entirely just on price extreme. But other than that, and as far as copper is concerned, I like your copper position, and I like your opinion. The thing is, if you assume there's going to be, if you have to have two assumptions. One, every planned China-U.S. deal probably won't happen the way that it's projected to happen. And so you can't really believe anything anybody says about meeting here, meeting there, or even when they do meet, what's going to happen on the one hand. And on the other hand, you're guaranteed some giant grand bargain at some point.
Yeah, exactly. No one
Just
knows
for
a
the
date.
for the press conference value.
Yeah. And we all know how these things work, right? They go in, they got a piece of paper, and they tick the things that they're meant to talk about, although they're not talking about it. And they say they've met. And then they hang 10 whilst the Mandarins scurry around and do the real work. And then they pick up the phone and go, we're going to say this and do that deal at this point in the future. So at some point, there will be some sort of deal. In terms of dates this month, we are looking at April 15th, trader friends. So if you want to write that down, April 15th. May. This is when we're expecting, thank you. The coffee clearly hasn't kicked in yet, Dylan. This is when we are looking at potentially more talks from the Europeans and the US. If today doesn't work, do like and subscribe if you like this, because we like to be useful. Dylan, have you subscribed and liked our new YouTube channel?
I'll do it immediately following this appearance.
Aha! Caught red-handed, says
I mean,
producer
there's a
Phil.
lot of channels. There's a lot. I got the
a lot of
I got
channels.
the
He's a
US.
very busy
But my
man.
loyalty is to London and to you and to Rich. So I make no excuses. I will remedy my error promptly.
And then this weekend, in terms of dates, again, of course, that expected meeting between the US and also China. As Dylan rightly said, no one knows whether a deal is going to be cut or what is going to be said at that point. And I think it's July 90-day, that deadline comes to an end July 4th. Is that right, Dylan?
I thought the deadline was from the April 8th. It was a week after April. The April 2nd was the initial press conference. Then 7 days later was the pause. 9th.
Right, because I
90
thought
days off of April 9th.
I thought
Maybe it is July 4th. Understanding Trump's preference for the highly theatrical, it wouldn't surprise me if it's July 4th. The whole thing might have been created just to end on July 4th.
Just to end on July 4th. So yeah, April 9th was when the administration announced that 90 days. The pause,
Yeah.
sorry. Yeah, the 90-day suspension of additional tariffs beyond the base 10%. So those are the key dates we're looking out for you. What's the rest of your day looking like, Dylan, before we leave you? Love you,
No, I
leave
mean,
you.
I think that it'll be interesting I think there's an opportunity here for the Powell last time around was implicitly critical of the American policymaking apparatus in terms of its temperament, which him and everybody else. I do think it'll be interesting to hear what the Fed discussion is like. More than I don't expect the Fed to do anything.
No, it's going to be all in the presser, right?
Yeah. But they should say something of some consequence, I would imagine, particularly in the context of the perceived relative strength of last Friday's jobs number and the relative optimism in the equity markets.
Yeah, I don't think they're gonna move the needle much though, at least not this time round. They're gonna wait, I think, in my view, till the next month when, you know, the true picture is seen in terms of data, and then they've got more firepower to kind of say, well,
Then they have more to talk on. You're right. I agree with that. I agree with that.
And we have to leave it there because we're coming up to a hard break. But Dylan, it's ever great to have you and have you back. Yeah, you
Pleasure
belong.
to be here. I'll subscribe and follow immediately, and I will see you next Wednesday.
Tell your people you belong to Europe now, not the US, so they
I
can't
will
kidnap you
subscribe
again.
and like. I'm going to unsubscribe. Actually, I'll unsubscribe. I'll shift my subscription.
Shift your subscription. That's right. Thanks very much. See you soon, Dylan.
All right. See you next week. All
See
right.
ya.
All right. Bye.